Hi guys, my name is Natalie. Welcome to my channel. We are looking at Bitcoin on the weekly, and we can see that last week's candle we had a very bullish candle to the upside, and right now having these levels right here. Why do I have that? Because right now we need to know where we can continue buying the market, right? We need certain levels. If the market comes back down, we need to know why. If the market comes back up, we need to know where to buy, where to sell. I'm gonna try to give you areas where you can actually buy the market from. Please never buy the market when the market is this high up. We need to wait for the market either to break certain areas or come back down and retest it, and then we see the continuation. We're also looking at Ethereum and see what's actually happening right now, and we have been going sideways, and right now we are on our way down, and maybe we can use this Fibonacci level right here to start continuing buying the market, or will it come back down to the support? So I'm gonna go through everything about Ethereum and Bitcoin during this video that I'm having for you. Please remember, I'm no financial advisor, so you need to look everything up yourself first, but please continue watching this video. I'm gonna show you what I see, what I think the market will do. Yeah. Looking at the weekly on Bitcoin and going back and see how the last week closed, we did have a huge bullish candlestick, and during the day we've just been continuing to go to the upside. If we're looking at the weekly, I took this horizontal line against these wicks right here that we're having, so because I just want to see where we potentially could come to. I'm also using these two levels going back in time on the 4 hour to see where the market has been back in time, and we can see that we have been here before as a support, as a resistance, as another support and resistance, but I think I took it on the 4 hour charts. You can see how that looks. Yeah, exactly. So I've been taking these two levels from the past, because we don't have anything else to look for right here on the chart. It's empty. So what we do, we need to come back in. We need to go back in time and see what actually happened. We could see that we have been we did break this first level that I did have. Going down to the lower time frames, you could actually see how it broke, came back down and retested it. I want to see how it looks on the lower time frames. We're just combining, so we can copy this level to the left side just to see. Yeah, okay, so either the market will continue to the upside, obviously, and then I have my other target, and that's around between $58,000 and $58,400. That's an area where the market actually can come to, and then you might see the market break it and retest it, or if we are not going to break it and it will retest the level from under, and then you might see the market coming back down to this level around $57,000. If we are looking to where the market potentially can come to if it comes back down for the pullback, looking at this wicks right here, so you had this higher high, you had the higher low, you had the higher high. So if we are coming back down, we can take the Fibonacci from the low to the high, and I just want to show you guys how perfect it actually is. So you can see that we are coming back down to that previous higher high that we're having, and usually the market comes back down and retests the previous high, create a new higher low. So that's a very good target for us to have. It is also the high of London and also the high of Asia. So this is a very respected high that we're having. So the market could actually come back down and retest both Asia and London one more time, and that's also combined with the Fibonacci levels around 56,900 and 56,700. If the market now decides to pull back, that's a target, but if it does not pull back, we just might see the market continuing retesting this support that we're having, and then you see the continuation. Looking at the lower time frames, we are just moving sideways right now, looking like this. So you just might want to see the market coming back down a little bit more to this level that we're having around 57,000, and then you see the continuation to the upside, because we are right now very, 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 very bullish. So the market doesn't have to come back down to these levels, but as long as we're having levels to the upside, so we know, okay, the market can come to these levels, retest it, make candlestick patterns. If you're using indicators, maybe you'll see the market actually respecting these areas together with your indicators. But if the market comes back down, it's just the same thing. We need to know where the market can come to. So we always have to be one step ahead. Okay, the market's breaking to the downside. Okay, we are at the Fibonacci levels right now. Or the market broke the Fibonacci levels. We are at the high of London and Asia session from yesterday. Okay, the market breaks to the upside. We're having huge support and resistance zones when we're going back in time. Looking back here, the one thing that we need to focus on right now, so if the market now, obviously the market will not just continue straight up. Even if the market has been doing that, you can see that we did have a small pullback. The market has been going sideways, straight up, market going sideways, straight up. So we need to look at 59,700 because that's the highest point of the wick on the weekly for 2 weeks. So if the market comes there, you just might see a wick. So on the lower time frame, you're having the pullback. So that's just something that we need to look for right now, if the market now continues. But otherwise, these are the levels that I'm taking and I'm using, and the Fibonacci. These are the levels. So trying to always be ahead of time, just so you understand what the market is doing. And just because the market is going down, you don't have to sell. Wait for the market to come to this area and then you're putting in a buy order. So that is something I would recommend. We're going to Ethereum. This is a previous support, a previous resistance, and we broke it, came back down, retested. We came back down again and retested it, and then we had a bullish candle just against. The market came back down, it retested it, and then it spiked up. During the day, we just been very bullish. We need targets on Ethereum too, so we're taking the Fibonacci level on the 1 hour chart around 3,400 to the high, and that's around 3,600. Potentially, if we want to see where the market can come back down to, is around 3,400-500, around that area. If you're seeing 2 touches, you're buying at the second touch right here, as long as it's closing above the first touch. But if the market doesn't decide to come up there, because remember, we always need to understand if the market pulls back down, okay, what's the first level we're looking at? Okay, if it's not breaking that level, it continues to the upside, we want the market to break the previous resistance, right? Around 3,600. And that's the same thing. If you're seeing the market pull back 2 times against these levels, you're buying at the second touch, as long as it's closing above the first touch that we are having. Right now on Ethereum, we are just moving sideways. So why we need to wait for the market to actually break out and retest whatever area you're looking at, if it's Fibonacci, if it's support resistance zone, supply and demand, because right now we are in between. We're just consolidating right here. If you're starting to buy the market around here, you just might see the market come back down to the support, and the market will move like this, and then you're having the breakout. So that's why it's really important for you to use these confirmations. Even if you're taking the Fibonacci is in the middle of the consolidation, but Fibonacci is a tool that we're using for the retracement, and most of the time it actually get respected. But what you want, that is why you need the second touch, because you want to see if the Fibonacci is respected. How does the market look against these levels? You don't want to have a bearish candlestick. I always tell you don't want to have a bearish candlestick just spiking through 2 times. Then you just might see the market is actually on its way down even more. It does lower highs, lower low, lower high, lower low. But if you're having your first touch right here and you're having your second touch right here, you're not buying anything, because the market just might continue down to the support. So that's why you really have to be very careful when you're looking at how the market structure is moving, how the candlestick is moving with the market structure. It's really important, guys. Just the beginning of the week, the market has been doing so much more than just continue to the upside. On Bitcoin, we did break this previous resistance that we did have, where I am waiting for the market to come back down a little bit, and then we just might see what's going to happen. Trade with risk management, try to buy as low as possible, try to sell as high as possible. Hope you learned something about this video. Please comment below if you liked the video. If there's something you're wondering, give this video a thumbs up. Please subscribe to my channel. I always go through these pairs every single day, even if it's a video, if it's a live stream. Thank you so much for watching this video. I hope you have a good day. Continue to have a good week, and we'll see each other on the next video. Bye!